Some say the property market is headed for a crash, while others reckon it's in recovery mode. So which is it? I went to Allan Soo, the Deputy Executive Chairman of Savills Malaysia, to get some answers. Okay, Allan, thank you for joining us. I think I've asked you to come and talk to us because there's a kind of perception in the market that the real estate in Malaysia, and specifically in the Klang Valley, might be in for a tough time in 2018. Can you drill down for us? Maybe we can start with the residential market. What your views are on the Klang Valley residential market in 2018?
Yeah. Specifically speaking, the Klang Valley market has been slowing down in terms of the residential market since 2013, with some prices coming down in the high-end segment of the market. This has happened simply because the affordability level has dropped, and where you have situations where, for example, bungalows are selling at above 3 million, that's a situation where you find that there's less demand and hence prices have been dropping, and we expect that to continue in 2018. But some of the other segments where you're looking at areas where price per square foot, for example, for high-rise, high-end, between 500 to 800 ringgit a square feet, that is where we would consider a sweet spot where developers who are building that, where the actual total quantum is below 600,000 ringgit. That's where you see the market is still very active and the demand is very strong in, of course, good locations. So although there is still an overhang in the sector, it's actually an overhang in places where the locations are not so good, in products which are priced too high, or in products which are not correct. There's, of course, also a combination of in the high-rise segment where you have high-rise termed as condos, as service apartments, and even as SOHOs, which are basically, SOHOs are actually residential units as well, the way they end up as a product. And some of these are part of that overhang we're talking about. But generally speaking, we know that the market has softened for quite some time, but with some exceptions where prices are still rising, and where exceptions are that launches, like for example recently launches by Sime Darby and launches by Bukit Puchong by TAPS, you have actually people queuing up and it's sold out within the day. That suggests that the demand is still there. Overall, I mean, if you look at the whole market, the Klang Valley has almost 8 million people. Household size is now dropped to about 3.88. Roughly, we're talking about nearly 2 million households in total. And the total stock in the whole of the Klang Valley is 1.89 million, which means we actually have an equilibrium between the demand and the supply. We have almost exactly the same number of households as the actual stock. Going forward, of course, there will be, in terms of the high-rise sector, we will have up to, I think, 2020, in the next 3-4 years, a total cumulative supply of the high-rise to 256,000 units from a current base of 125,000, so it's more than double the supply. Would that cause a crash in itself? No, simply because these have all been, mostly have been bought. The overhang is actually, as I said, in a more generalized context. Yeah.
Okay, so Allan, let's move on to the office commercial sector, right? What are your views on this area in 2018?
It will continue to weaken in 2018. That's what we will call the short term, 1 year from now. Simply because we have a very large supply base now. The total supply in terms of office stock in the Klang Valley is now about 119.5 million square feet. That's actually larger than Singapore's stock. And in another 4 years, it's going to go up to 133 million square feet. The actual vacancy rate has increased from what used to be about 10% to now over 21%. This suggests then that the market is weaker than previously.
Is there cause for concern?
The cause for concern is there because this is talking about at least 20 million square feet in the market that is vacant.
That's right.
That's going to be difficult because the take-up rate in a good year is only 3 million square feet. The other thing is also rental rates. The average rental rates about 2-3 years ago was about 9 ringgit a square foot gross in the Golden Triangle. Now it's dropped to about 8 ringgit plus. So obviously there's a rental drop.
So the concerns really lie in office commercial space in the Klang Valley.
Yes.
What is best case, what is worst case? From a country perspective.
The best case scenario is that the office market is changing in terms of the demand as well. We were an oil and gas country, and a lot of the demand was coming from that, but the financial sector has started to grow as well. TRX is one good example.
Okay, so they'll at least mitigate some of the damage.
Yeah, but the new demand is coming from co-working spaces, and there are large co-working companies from US, from China, and from even locally coming up with demand for like close to 1 million square feet, and so that's going to be a very good one.
Still not enough to take up 20 million square feet a year, but what's the worst case?
The worst case is that rents will continue to drop. Definitely it will drop next year.
Okay, so what does it mean for builders and building owners?
Don't build.
Don't build.
Yeah.
Okay, but are they paying attention?
Yes. Yes. Most developments where we're advising the developers are staying away from office space.
Okay, cool. Yeah.